Now let's talk about the Indian economy. It appears to be slowing down. After years of rapid growth, it is hitting a speed bump. Fresh GDP numbers are out and they do not paint a good picture. In the last quarter, India grew at just 5.4%. That's a two-year low. In the previous quarter, the growth rate was 6.7%. So this is a sharp decline. It's also well below expectations. Economists had predicted a 6.5% growth rate for India. What about India's Reserve Bank, the central bank? It was aiming for 7% growth rate for the entire year. Now that target appears tough. So what happened here? What explains these numbers? There are a few signs of distress. For starters, wages in urban India have contracted. This impacts the middle class directly. Their incomes are shrinking, and it's showing in consumer spending. Even on items like food, the middle class is cutting back. Citibank recently released a statement, an assessment. It says that there is a sharp slowdown in household spending and that consumer spending fell to a two-year low this month. Again, why is this happening? The report says it's because people are earning less, so they're spending less, even on the basics. They've cut down on the spending. And leading companies are feeling the pressure because of this. Like Maruti Suzuki, India's largest car maker, Bajaj Auto, the top seller of motorcycles, Hindustan Unilever, India's biggest FMCG company. FMCG means fast-moving consumer goods. All these companies have reported weak earnings. They are worried about low demand from the middle class. So that's one area of concern, the financial distress in the middle class. The second worry is government spending. This has been a slow year. Government spending is a major driving force for the economy. It creates jobs, which has a trickle-down effect on the rest of the economy. But this year, the government spending target was $132 billion. In the first half of 2024, just 37% of this budget had been spent. And the reason is the general election. India held the national election this summer, so several projects had to be delayed. Because governments, cannot launch major projects during election time. It is seen as a violation of the Model Code of Conduct. Big announcements can also influence voters, which leaves a government with two choices. You can either start major projects before elections are announced or wait until they're over. Now, India's general election was over in the month of June. That's when the results were announced. But the spending is yet to recover. The government needs time to reboot the projects. In fact, officials had warned about this. A statement was issued recently. It said the government may, and I'm quoting, the government may undershoot its spending target. So these are the two big reasons: shrinking income of the middle class and slowdown in government spending. Some key sectors have also been sluggish, like manufacturing and services. But it's not all bad news. There are some positive signs as well. Spending in rural India is starting to pick up. The recent festive season would also help. We'll see the results in the next quarter numbers, perhaps. Consumer spending by Indians was strong. Autumn crops have also been healthy, so farmers are expecting a bumper harvest. All this could help the Indian economy bounce back. The RBI is optimistic. It has kept its growth projections unchanged.
In recent years, the global economy has gone through a period of continual and unprecedented shocks. Global trade is projected to remain higher in the current year than the previous year, notwithstanding the sanctions, the tariffs, import duties, rising cross-border restrictions, and supply chain disruptions. Emerging market economies have shown greater resilience than advanced economies in the current phase. Amidst these headwinds and contradictions, the Indian economy is sailing through smoothly, powered by buffers like strong macroeconomic fundamentals, stable financial system, and resilient external sector.
So the RBI's growth forecast remains unchanged. The bank has a critical role in reviving India's economic growth. It has to manage inflation, which has been consistently high. Last month, food prices surged by more than 10%. As a result, the RBI kept interest rates high, and it is unlikely to lower them anytime soon, not until inflation is under control. because high interest rates means expensive loans. So people borrow less, they have less cash in hand. This keeps inflation in check. Now, India's challenges mirror the global trends. Major economies worldwide are slowing down. In 2024 and 2025, the world economy will grow by less than 4%. If you compare that with India, India is still performing much better. Even with these numbers, India is among the fastest growing major economies in the world.